think what's interesting is I actually was at a capital markets conversation yesterday in Beverly Hills, and the conversation was almost the opposite because FHA, and a lot of the government money that goes into real estate. Now, as we all know, money's fungible, right? So you look at some of these institutional places, they're not really doing office right now. There's some other asset classes out there they don't necessarily love. So they're looking for other alts. And what the conversation was yesterday is because of the FHA situation, they're actually putting more capital into the multifamily space, which is pushing out some other capital in other places just because you can get such great rates. If you've been around for a while, if you've got good connections at FHA, you can prove that, hey, I can turn this around and be a good investment. So now you've got this capital looking for other places, and some of those are going to be banks as well. Now, does that necessarily mean storage? That wasn't really spoken about specifically, but again, money's fungible. It's going to look for the best returns, and that's really where the big conversation was yesterday is as this capital starts to continue to move into the marketplace, and we see it in the stock market, and everyone's like, how can the stock market continue to just go up and up and up? There's just so much liquidity in the system. And so my point being is that as these guys are chasing returns, and you and I have talked about this, if things go in a bad direction, and according to employment numbers that we might be going in that direction, self-storage is typically a pretty safe asset class. I think you're going to see more and more, and we said last week, more and more of these funds are saying, hey, we got to have 4 or 5% of this in self-storage, which is going to, I think, produce a really interesting conversation down the road as you've got all this capital chasing a fixed amount of assets.